Our 5-year celebrations continue, and today our focus is on silver. And of course, we brought back the silver guru, who was one of our first ever interviews. David Morgan joins me now. David, good to be reunited with you.
Well, thank you very much. It's great to be back.
So David, isn't it amazing? When I interviewed you back at the PDAC in 2010 in Toronto, silver was sitting around $17 an ounce. And as we know, it got close to $50 in 2011. And here we are back at $17. So we've really come full circle, haven't we?
Well, I always said silver is quite a ride, and it certainly has been.
So, David, last time we spoke, you said that the dynamics were compelling for silver to the upside. Now, this past year, silver has dropped over 20%. Do you still feel the fundamentals are in place? Are you still bullish?
Well, fundamentals still are probably better than ever, really. The number one part is the investment, and that is, you can buy silver now under the cost of production from primary silver producers. So that's a good deal for any investor at this point in time. Secondly, the industrial demand is there regardless of price. And I just want to drill down a little bit, on the solar industry. We can probably take that up later. But overall, the fundamentals haven't changed. They've only strengthened. The QE program certainly have put a lot of money in the banking system. But silver's not looked at as a safe haven investment right now, and gold is pretty much shunned also currently. So again, when you stop and think about it, the careful consideration of why you buy these metals, the reasons for buying them have not gone away.
And David, we'll get to price forecasts in a second, but first, in a recent interview, you mentioned that as much of 70% of the silver produced is an offtake of mining for base metals. Now, given that these producers don't care much about the price of silver, they continue to produce as long as they're making profits with base metals, adding to the supply of silver. So is this contributing to the pressure we're seeing with silver right now, David?
Yes, it is. And it's more than maybe a cursory thought about it would indicate. One, it's obviously the physical metal that's produced, and they really don't care too much about the price as long as they're making money in copper, lead, zinc, whatever else. However, those mining entities turn what's called their book over to bullion banks or banks in general, and they do a lot of hedging. So it's leveraged as well. So you have that 70% that comes in the market, in the physical market, and then you also have that levered up quite a bit. And that of course, distorts the true fundamental price because you're talking about a lot of paper derivatives. So there's a lot of reasons why those entities have a great swing in the silver market.
Now, David, you touched upon the use of silver in solar panels. I know we've spoken in the past about the various ways you can use silver, but let's talk a little bit about solar panels and whether this is a bullish factor for the metal.
Yeah, I'd like to drill down on that a bit, Daniela. If you go back to when I wrote the article or the white paper on the silver over the next decade, and I wrote that in 2010, about the time that we did our first interview together. And what I said, I took a lot of Jessica Cross's work on the industrial side and a lot of my own work on the investment side. But on her paper, she said that the industrial demand for solar alone would be about 130 million ounces per year, and that would be around 2015 or so. We were actually on track for that up until a couple of years ago. And what happened was normal in all economic conditions. The manufacturers found a way to squeeze out silver from the panels, so you're using less per panel. So if you go back and say, well, use this much per panel, that amount of silver would probably be correct. But I want to drill down even further because what's interesting is how economics works. Let's say that anybody in North America could buy enough solar panels for $300, and that would power their electrical needs at their house for the next 15 years. Think of how much demand there would be for solar panels. It'd be almost infinite because almost everyone say, well, I'd rather put up an upfront cost of $300 and never pay a utility company for electricity again for the next 15 years. Now, that's an exaggeration, but I'm trying to give a thought process on why the industrial demand for silver, one, isn't going away, and two, solar is actually looking a little brighter than most people might expect just based on how much is being used per annum.
And David, what about the use of silver in medicine? I read a recent article where we could potentially use the metal in fighting Ebola. Have you seen this, David?
I have. In fact, at the Silver Summit, I'm going to share some of my time with Dr. Pedersen, which I interviewed. And I could share the link with you later, but it was a long, long day. But I'm not going to speak about it other than I'm going to ask the question, do silver and Ebola mix? And the answer is quite fascinating. And we will be examining that at Silver Summit. And for all members of the Morgan Report, of course, I'll drill down and publish that. As far as what I can put in the public domain or not, I'll have to check with, the legal eagles, because I can't make medical claims, but it's a very good question to ask.
And I definitely want to follow up on that topic, David. But for now, what do we do with silver at these prices? Is it a buy?
Absolutely. I've bought from the $20 level all the way down. The stocks are extremely undervalued as well. It's probably where the best opportunity lies. And certainly silver bulls and gold bulls are probably very frustrated at this point. I don't think we have to wait much longer for the bottom to show itself and start back up slowly and surely. But no, if you just take a deep breath. And the other part, Daniela, if I might, is just overloading in an asset class. I love silver, and personally, I am overloaded, but I can live with that. I've been in this market for decades, so I can handle the pressure. But a lot of people can't. So if you have 10 or even a 20% allocation, you can sleep pretty well, even with these kind of prices. But if you put in, 50%, 60, 100%, if you've really overloaded the sector and you bought at the wrong time, certainly you're hurting and discouraged and angry and all of those things. And that's the beauty of really being a mature adult and investing with a purpose, an understanding, and diversification.
And David, that is really something you've said to me since day one, that silver is really for those that can stomach the ride. And I'm afraid to know how much allocation you actually have, but you are the silver guru and you can handle it. But David, you feel that there's more of a bottom in store for the metal?
Really tough. Gold is triple bottom, it's holding that. Many of the major stocks have key reversals, which are important. We're going to be writing about that in the next month's issue. But it's impossible to know at this point. I have to see more trading. I really want to see a lot of short covering. And the cinching of the deal would be if you saw a big fund manager like an Eric Sprott or Stefan Spicer or somebody come into the market and buy a lot of physical gold and silver and see what happens, how the order was handled. I think that would give a lot of clarity to the market as far as what's really going on. And hopefully that'll take place here in a not too distant future.
David, finally, another topic I never got a chance to speak to you about, the silver fix. Did you ever think 5 years ago that we could see it gone and now replaced by a new system administered by CME and Thomson Reuters?
No, I didn't. But when it was being batted around, I basically kept my mouth shut and said, I'm going to defer comment. I like to be right. I stick my neck out all the time. And I felt it really wouldn't change much. And I think I mentioned that very, almost under my breath. I didn't make a big deal out of it. Of course, it came and it went, and now we have the new situation. And I did write about it, either public or in the member section, I forget which. And it really hasn't changed that much. It's still basically electronically formatted. A group of electrons go across the board. So I'm trying to be humorous here. But not a whole lot has really changed as far as the fact that the derivatives market is providing the information that's used to set the price.
David Morgan, thank you so much for your thoughts. Thanks for taking part in our 5-year celebration.
Well, it's great to be back.
And thanks for watching as we continue with our coverage celebrating 5 years of Kitco News. We'll have more for you Thursday and Friday, so be sure to stay tuned. In the meantime, email us newsfeedback@kitco.com.
Kitco News is one of my favorite news sources. I use it not only for interviews, but also for data and up-to-date information on the gold market. I wish them every success in the years ahead. Congratulations on 5 successful years, and I know you'll have many years in the future. So Daniela and the team at Kitco News, congratulations on your 5th anniversary.